Hey everybody, it's Pete. Excuse me. Good morning. Welcome to a new episode of today's Best Stock Picks. It's Wednesday morning, April 14th, 2021. Well, the story of the day, actually there's two, the really big ones. Coinbase IPO, which is going to be a direct listing. We'll explain what that is in just a second. As well as kind of getting buried underneath the Coinbase news is earnings season and bank stocks starting out today. So we're going to discuss JP Morgan, Wells Fargo, and Goldman Sachs. We're going to take a look at the charts. We actually mentioned this week that the banks have kind of been consolidating for a few weeks, and we were expecting something big. So we're kind of heading into that consolidation and price action. And that consolidation, again, there's only two price action patterns you really need to know to look at charts and say, I know exactly what I'm looking at, which is a consolidation leads to an explosion in volatility, which we know is a trend, and then that leads to a pause. So in the boot camp, we actually call that a push and a pause, and that kind of gives us conviction in the consistency of that movement. So that's what we're going to get into. That we're going to actually break down a couple of stronger sectors, as well as some stocks that have not been in play recently that actually have stage two order flow right now, which is kind of fun. So we're going to dive into those stocks as well. So we're going to head over to the charts and let's get going. Okay, so we're actually going to start out, obviously, we want to start out talking about Coinbase. Let's get right into it. We're just going to do a quick lesson. I did a lot of research, and it seems to be that this article here on bankrate.com gives the cleanest and less confusing description of actually what it is. So I'm actually going to come off the screen, and we're just going to go right down. So it is an IPO, but it's technically an IPO without doing an IPO. It's a direct listing, and we're going to actually explain what that means here. Now, it's pretty exciting because with Bitcoin and a lot of the cryptos at all-time highs, interest in crypto at all-time highs. We're watching. We had a little bit of a disconnect. We're actually going to talk about Merit and Riot yesterday. There was a little bit of a disconnect. One was much easier to trade than the other one, which was surprising. But this is what we want to talk about. It's going to be a NASDAQ stock. The symbol is COIN, which I think is really, really awesome, quite honestly. They're talking about a $100 billion valuation and a potential $250 price, I believe I saw, for the actual open. So that's going to be interesting. I don't see what time of day, but we'll obviously keep everybody updated. We'll do a YouTube short today. But here's the biggest thing. It's a direct listing versus an IPO. It's not the standard way of going public. So here's the biggest definition here. An IPO company hires an investment bank. In a direct listing, it's the company's insiders that are actually selling the stock themselves. That's a big, big difference. So it actually leads into not so much risk. I know they use the word risk in here for purposes of the video of the article, but here's what I want to get across. The market may be thin. We get a ton of questions by everybody in the boot camp whether or not we should be or will be trading it. As with anything, quite honestly, what stocks you trade, which stocks you choose to trade. I'm actually going to come back to the screen for 1 second. Which stocks you choose to trade should be based on your experience level. It's exciting. It's going to be great. I will be involved, but I have 21 years experience. You have to decide which fight you want to take to the market. Do you want to trade a $20 stock without a lot of volatility that has a track record, or a $250 stock that has zero history that is a pretty interesting story? Active traders will be trading it actively, and active traders will be in and out of the stock all day. It's not an investment. There is what's called the IPO pop, where the stock opens up and rockets higher at that particular day, maybe even for a day or two, and then you start to see the stock pull back and then kind of catch a bid after a while. This is different, so it's going to be very exciting, quite honestly. Maybe we'll actually do a YouTube live stream, and we'll talk about it. Maybe not necessarily during the IPO, but it will be kind of fun. So we're going to go back and continue to read what's going on here. So again, thin. If you don't understand what thin means, that means that there is not a lot of bids and offers at each individual price, and that means that the liquidity is challenging, and that means you will get really bad fills. See, these are the kind of things that you need to know as a trader. So depending on how it's trading and the liquidity, that will dictate your share size. That will dictate if you even choose to trade it in the first place. So again, this is something that experienced traders are aware of. Volatility, that goes without saying. A risk of trading something like this is that it's going to be kind of all over the place. It can be exciting. It's fun to watch the green and red and green and red, but you need to be able to handle the volatility. And what does that mean? That means that you need to be able to make quick, decisive decisions. Here's another thing. Dual class shares are not popular, but you know, I know something. I don't think this is that big of a deal. Everybody on Wall Street is going to have their eyes on this today. I think that there's not going to be any problem at all with actual attention on the stock today. That's for sure. I don't think the fact that it's a direct listing is really going to make that big of a difference. And as we said before, the insiders and only insiders are going to be selling out. So the bottom line here on this is it's going to be exciting. Quite honestly, not even to undersell it, it's historical. I mean, Bitcoin 18 months ago was kind of an afterthought again. Is it real? Is it not real? It starts to get a lot more credibility in the markets themselves. Obviously, Elon Musk is helping out with that. PayPal and Square and a lot of the credit card processing companies now as well are on board. And now it's just a question of if and when the banks do, which we're going to segue right now into the bank earnings as well. So let's hop on over. We're going to specifically take a look at I'm going to start out with JP Morgan. And again, one of the biggest things that we want to pay attention to is price action heading into the earnings. And how does that look as far as giving us a forecast? Is price action discounting the anticipated numbers? And in this case here with JP Morgan, absolutely not. Goldman Sachs, very similar, right? Kind of consolidating. So really the 2 weeks prior heading into earnings, there is nothing going on. Now, there's one thing that's very common in the markets, which is never short a dull market. And the opposite of that, which actually means you're probably going to be heading higher after stocks consolidate. And Wells Fargo, we mentioned yesterday, is actually kind of drifting up into that breakout level as well. So JP Morgan and Goldman Sachs kind of going sideways. I'm anticipating them both rallying out of this consolidation. We'll see, but that's the play that I have heading into this today as well. So one thing I want to point out, and while it's exciting that the market is actually continuing to make new highs, there's really no other way to put it, make new all-time highs every day. What's interesting, and this is really what separates you from just being a chart reader into a tape reader and ultimately a trader who really understands what they're doing, is you start to read the clues underneath the market. And right now what we're noticing is the dramatic lowering number, it's going down, of stocks that are not making 20-day highs. So normally in a market like this, when everything is on board, you start to see breakouts, you start to see breakouts, you start to see breakouts, and the breakout numbers starts to become bigger. And we're actually not seeing that right now. As a matter of fact, the number is going down. And we're going to show you one other thing too quickly here, which is looking at the stocks in the Dow. Only 12 out of the 30 stocks in the Dow broke out to new were positive yesterday, never mind even breaking out. So we're starting to see, like, this is the way that I explain it, and I think it's probably the easiest way to explain it, is the car is still going forward, but your foot's off the gas now. It looks like it's still going in that direction. It's definitely going in that direction, but there's no gas behind it right now. In order for us to feel massive conviction with adding to our existing positions. Now, swing trades, a lot of these are kind of getting into the nosebleed seats where they've been up 10, 12, 14 days in a row. This is where you just keep trailing that profitable trade higher. Don't necessarily get out, but you need to have in place a strategy from initial profit target to trailing stop to optimal profit target. And there's always 3 stages like that. You have to have reference points. And again, obviously we cover all of that in the boot camp. So click the link below the video. You'll learn more about that. So anyway, not hitting the panic button by any stretch of the imagination. Just be aware that there's certain things you need to pay attention to besides just looking at the major indices. Sometimes the major indices don't tell the whole story because those indices can be weighted by a few stocks that are performing really, really well. For example, Tesla had a really good day yesterday, as we discussed pre-market yesterday. So just be aware you need to do both. Don't be lazy. Get in there, look at the indices, and then go underneath and look at the stocks in those indices, and you'll start to see patterns. And the opposite is true also. When the markets are breaking out and the amount of stocks that are breaking out, now all the water is on the same side and it's pushing in the same direction. And those are the ones you squeeze for a lot of extra profits. And again, That's the difference between a struggling chart reader and somebody who's getting paid, is understanding that second confluence of market price action where everything's on the same page, and you hold those longer. You squeeze a little bit more juice out of those winners because that's what's on the table. Sometimes there's scraps on the table, and sometimes there's big profits on the table. You need to learn the difference between those two circumstances, because all of those losses kind of just vanish. The pain of all the losses vanish, which again, losses are acceptable, part of trading. They vanish when you actually have bigger winners, and that's a big part of learning how to trade. So we're going to go into a couple of different sectors that are strong right now. Technology stocks remain strong. Net is one of the stocks that we've been watching, actually had really good price action yesterday. The other one, just so you could write it down, consumer discretionary, again, is riding high. If we stick with technology stocks, we want to take a look at CRWD, which actually had a nice breakout yesterday as well. You can see finally, like a lot of the stocks that we've been talking about lately are breaking this 4 to 8 week downtrend. Now it's actually 3-day consolidation into well bid. Next level here is around 230, so we have some room to go. Tesla, we obviously mentioned yesterday, finally got above 700, held the bid. That is the big thing. Held the bid, meaning above the open for the better part of the entire day. Just want to talk about a couple of other stocks. Actually, one other stock that has earnings today, which is BBBY. Again, very, very similar to Bed Bath & Beyond. Nothing going into earnings, no clues going into earnings from price action. So again, a quiet market usually rallies. We'll see. That's how I'm playing those two. A couple of stocks that I just have as day trading ideas for today. Again, Tesla and Nvidia, which has just been off to the races. We call this the bullish echo, where it's not a good swing trade anymore at this exact price action because risk reward doesn't make sense. I am looking to day trade these right now. Something else I want to talk about, obviously with all the attention on crypto and the Coinbase IPO, crypto breaking out yesterday, hit 64,000, I believe was the ballpark number, Bitcoin specifically. You'd think that Riot and Mara, two of the more popular crypto stocks, would have just been off to the races yesterday. They both opened significantly higher, but Mara was like stuck in the mud like quicksand yesterday. And Riot, ironically, with a not as clean price action, was the stock to trade as a day trade yesterday. It was pretty interesting that Mara was the one that exploded last week, hit new all-time highs, pulled back, and we were expecting that to have a vicious move to the upside yesterday. It didn't. Riot actually had a little bit of better price action, and that was the stock to be involved with yesterday. So very important, as we said yesterday, you have the market, the sectors, the industry groups, and then the individual stocks. When that individual industry group is strong, you need to have a list of those stocks. It's the right way to build a watch list, because again, when all of that money in that one individual pocket of opportunity, that one industry group is seeing buying pressure, you want to be paying attention there, but you have to do that work prior to the market. You need to build industry group lists. So all the cannabis stocks in one list, all the electric vehicle stocks in one list, and so on, and bank stocks, so on and so on. You need to do that in your spare time. You need to do that in your spare time, because when the market opens, they pop out at you where the money is. For example, energy stocks have been getting hammered. I guess hammered is a little bit on the stronger side compared to the way the market's going up. But for the most part, they're weak. And when you see that, you're like, okay, money's flowing out of that. Supply is getting dumped on the market. Market's making new all-time highs. Let me stop banging my head against the wall on that, and let me just look for some stocks to get long. So just a couple of other ones that now we've seen. We just talked about CRWD. We want to go to two other stocks. We want to take a look at DocuSign, which now actually has stage 2 order flow as well. It's kind of banging its head right here. The next level is up in the 245 level. If it goes above yesterday's high, or really above 230, 225, we should be good there. They're looking for a run to 245. And last but not least, one that we have been watching and trading for a while, and again, this is kind of getting repetitive, but it's really awesome, is stocks breaking these downtrends going back to the beginning of February, and now we have a 3-day pause leading into a breakout in Roku. One other one we talked about, we mentioned this briefly yesterday, had a good day again to be a day trader. Spreads can get a little bit wide on this stock, but keep an alert set for OSTK at 81. That's the big level that we're watching there. So a lot to cover today, a lot going on. Earnings season starting out with banks today. Pre-market, everyone that I mentioned before is scheduled before the bell. Coinbase during the day today. We'll probably drop a quick YouTube short just to let everybody know. And of course, the regular stocks have been trading. Net, DHR, both had solid breakouts. I'm going to see if we get some follow through in Riot today as well. So have an awesome day, everybody. Please click down and subscribe. Give us a thumbs up if you like the video. And just have an awesome, awesome day. Thank you so much. I appreciate you joining me today.